Welcome to Pioneers, the show where we explore the intersection between humanity and AI. I'm your host, Ankur Patel. Over the last 10 years, I've built 3 AI startups, written 2 books about the subject, and I run a weekly AI newsletter. I also regularly teach and speak about the topic at conferences. This technology has grown faster than I think any of us could have imagined, and it's making us ask really important questions, such as how ethical is AI? What will this technology look like in a few years, let alone a few months? And most importantly, does it have the power to truly change the world? And what does it mean for you? On this show, I'll be interviewing the founders, operators, and pioneers that are introducing AI into their companies and industries. We'll be asking them the really heavy-hitting questions that make them dig deep into the core of what we do. And without further ado, let's dive into today's episode. Today I have a very special guest, a good friend of mine, Aakarsh, who's the Chief Strategy Officer at Ravenpack. Welcome to the show.
Ankur, thank you so much for having me here.
So at Pioneers, we always love the founding story. So we'd love to hear a little bit about your journey and how you got to the role that you're in today.
My background. So I have been at the, cross-section of tech and finance my entire career. I am the Chief Strategy Officer at Ravenpack. I've known Ravenpack for about 12 years. So we were actually very close friends. I was a customer of theirs. I was an advocate of theirs at FactSet. But my background is I ran data science at a hedge fund called Third Point. We started the data science team there, and it was a interesting opportunity to bring quantitative finance techniques to fundamental investors. And at Third Point, you kind of invested in everything. So it's like, how do you inject data and analytics into the entire investment process? Before that, spent time at FactSet. I ran their screening team. Screening is an app that allows you to screen anything that FactSet has. It touched 200,000 users. And I came to FactSet from an acquisition from a company called Revere Data. It was alt data before it was alt data and cool, but we were building supply chain networks, classification systems. So I think my entire career I've just been in this space of data and analytics. So,
yeah, it makes sense that journey that you're on is one that I think, ironically, so few people outside of the hedge fund space know about. So hedge funds in particular are famously known for acquiring lots and lots of data and being very, very secretive with their usage of it. And it seems like you've played in that sandbox for a long time. So, first question, for you is. To our average listener out there, how do you describe what alt data is and why hedge funds are so hungry for acquiring this data and then using it for their decision-making process?
The simplest example I can give you is alt data is new pieces of information that is used in a decision-making process that wasn't used in the same process traditionally. And it's just I'm smiling because it's a hilarious story. I remember at FactSet, back in the 1990s, you had banks that had, analysts that would produce estimates, but not every bank would tell you which analyst is producing what estimate. And you had a company like FactSet that came in and said, if I just collected all this information and I presented it to you, would you be able to make a better decision? That was in like 95, 94. Mm-hmm. That's what took FactSet from 94 to 2000. That was their killer product. We see the same cycle repeating. 2008 and 9, data suddenly became accessible. A lot more people were online. People understood this idea of a digital footprint. And investment professionals weren't traditionally using that data in their investment process. So alternative data is things that can be measured, that can be put in front of an investment decision professional, and they can act on it. I think what is alt data today might change. It'll just become data tomorrow. That's why I was just smiling at the alt data definition. It's a way to classify new stuff that you can measure.
Right. And it's a lot of that data is generated by all of us, like average Joes, by the way we interact with digital services, right? So the couple of the data streams that come to mind are email receipt data, credit card data, foot traffic, point of sale, clickstream data, what you visit on a particular website, all of this is that digital footprint that you're talking about. And if you can map basically that digital footprint to either intent to purchase or actual purchase, then
Hmm.
you could figure out how brands are doing, and then you could kind of put money behind that. And that's extraordinarily valuable if you're a hedge fund manager, let's say, and you're betting on the next quarterly number that's about to come out.
Yeah, and during COVID, Wall Street bets on Reddit was alternative data. Everybody
That's right.
needed to scrape and see what's being spoken about in Wall Street bets because it mattered for their investments. That's what I meant. Like, it's so fascinating. Anything that can be measured, I would consider to be alternative data.
Right, exactly. Yeah, and the definition changes. It gets more
Mhm.
and more inclusive of new data streams. But you're absolutely right about that. And I think when you think of machine learning and alt data together, machine learning is fairly new, but alternative data or the use of data that you're mentioning it has been around forever. And I think the term that people often use is the quantitative finance, looking at data, making decisions off of it. Maybe can you talk a little bit about how the hedge fund industry is now working with data? Maybe using quantitative finance as a term, perhaps, and then
Mhm.
maybe just more modern machine learning approaches.
Okay. Let's bucket the industry into two types of folks, I would say. One, you have the sophisticated folks that are very, very comfortable working with, massive lakes of data and processing it in signals and using it in their trading systems. And then you have folks that have a more discretionary process. So I can go either ways. The quants, I mean, if you think about Renaissance, they've been doing it for a very, very, very long time, right? This is just new streams of data for them. They've been trading in signals like this. They will always have new techniques, old techniques. From what I know in the industry, it's surprising. Some of these guys have been doing this for a long time, and some of the original alphas that we will never know about have existed for like years, and these are like 5-10 years worth of alpha on a strategy. On the flip side, if you think about the discretionary asset managers, that was a I remember when I first joined Third Point, this was like 2017, they were considered to be cutting edge and saying, oh, this is happening. The industry is starting to get a lot of new data points from news providers or transaction providers or email receipt providers. And they were like, how do we start using this information? So I think on the discretionary side, there's now, I would say, standard adoption, because there's been an ecosystem of vendors that have grown up. It's a full industry right now that are able to service these people that are making investment processes. But they do all the work and then they process it and then they give it to an investment professional. I would argue they're still using it the way they would normally use it, except the data point that they use to make that decision is now like differentiated. And it's about the timing of that data point. I know you asked a question about how do they use AI and machine learning, and it's just a very broad topic. So should we focus on a particular area, idea
Well,
generation, or like investment portfolio decision making, or how you want to model your portfolio? Which one should we like cover?
Well, I think you did a good job breaking down the two big buckets, which is there are the fundamental investors and then there are like the quantitative investors, right? So
Hmm.
maybe let's talk about the fundamental investors. Would they look at using some of the more sophisticated techniques, let's say machine learning, it could be NLP, it could just be data science. How are they incorporating for that universe of fundamental investors? Where do they inject, let's say, some of these techniques into what they do?
I think a lot of investors, at least sophisticated investors, have extremely strong opinions about a business. They understand the business really well. So if you think about, you have a thesis or you have a hypothesis, it could be a short term, like for a quarter, or you want to hold a company for 5 years and you're trying to understand its moat. What are the things you need to measure to find that moat? And what do you use to forecast what that one, data point is going to look like? I think just that is its own art. And I've seen, it's kind of interesting. We've had deep learning systems, we've had very sophisticated um, signal detection systems. But in my opinion, a simple like linear forecast of what something can do is easy to understand. And as long as you have a lot of data points, you can kind of triangulate a hypothesis on it. That's one way that, there are like traditional systems seem to still work extremely well when it comes to extremely noisy data, because machine learning systems are known to overfit and all of that. So I
Mhm.
still think linear systems work well there, and it's kind of a controversial opinion. But I remember very sophisticated models that can give you the best point estimate, but then you try to explain why exactly did it make that forecast. And that's like a little chasm between, I understand that this forecast is a much better prediction, but if I don't understand how it ended up with that prediction, it's really tough for me to make a large decision that I am dependent or I am supposed to go make. Just that is it's a very philosophical way of like,
Yeah.
if this is what I need to do, I'm not going to do it by something that I don't fully understand.
No, absolutely. I think you're right. Which is, unless you could have interpretability of what the model is doing or how that estimate came about, you don't have a human connection to the actual number that's being spit out by some data science function or some model. And then when something in the world changes that maybe the model doesn't have full context on, you're not able to go and work through. Okay, well now with this new information, how should I think about this estimate that the model put out, because the model didn't have this prior context of like this world event that just happened, like let's say COVID, right? And so
Hmm.
you can't walk through the model's understanding because you have no idea what that understanding is. It's a black box. The other really important thing that you mentioned, which is critical, is sometimes simplicity is a lot better than complexity, because these machine learning models, they can approximate very complex patterns, but by introducing complexity, you think you get to a much more like higher conviction result, and so you have false confidence in a number, and now we have no idea how the model even got to that number, but then you're trusting it, and so you put a lot of money behind it, and the whole thing blows up. Where if it's something simple, you can actually walk through how it got to the result, and it's not overfitting to some data point and overly extrapolating from some prior event to make a very high conviction bet, right? So you're able to temper that, you're able to walk through it because it's simpler to walk through in the first place.
Yep. I mean, your model is only as good as the person that takes the output and makes a decision on it. You can have the best predictive model, but if people aren't actually using that in their process, then what good is the actual model? We used to spend an inordinate amount of time in auditability trying to understand how a particular data point was created, what were the things that would actually change that underlying data stream before we would even touch or think about how do we forecast a new signal for it. There is a different game for that, and that is, I would say, the systematic guys would appreciate saying, I want to get a lot of signals and find alpha within these signals.
Right.
Fundamental and discretionary is very, very different, and I still think that's true to this day.
That makes sense. Yeah, they still want that interpretability, whereas the quantitative guys may not want that, right? Or they don't
Mhm.
need that at least. They have comfort around making 100 bets with different quantitative measures, and the whole idea is that they're maybe lowly correlated, and you package them up, and so you kind of go through a signal processing piece to get to the right answer. And I think that what you're saying about discretionary and fundamental investors is very similar to the problems that a lot of business leaders are facing today in working with machine learning. For example,
Exactly.
machine
Yep.
learning in underwriting decisions, right?
Mhm.
How is an underwriting decision made? Is it biased? Is it unfair? Is it, how can you potentially justify it if you need to justify it later down the line? These are age old questions that you can't have a black box in some machine learning applications, and underwriting is a good example. It's very similar to the kind of the fear of having a black box when if you're a fundamental or discretionary investor.
You spent some time with the insurance industry, have you? I,
Yes.
I mean, I'm curious. I don't know a lot about that space. Like, I can talk about equities trading and anything in that front, but on the insurance side, I mean, actuarial science is very machine learning driven and it's very data heavy. They're always looking for. I remember them putting trackers on cars because they're like, seeing how you accelerate seems to be a high correlation where the odds of you having an accident. So isn't that the same that at least for actuarial type decisions in the insurance space, machine learning is heavily used So it's probably just like the underwriter, or if we give a decision to an underwriter and we're like, this is what you need to underwrite, this is
Yeah.
a complex scenario, how would you do it? I think that's, isn't that where machine learning would fail today, at
Well, I,
least?
I think you're absolutely right that in insurance and underwriting, you do need to get as much information as possible about whatever it is that you're trying to underwrite, right? So if it's an individual you're writing a policy for or business, the more data, the better. But then the machine learning models are basically making a determination based on that individual relative to the population, and then trying to basically understand um, how similar is this to others that we've seen in the past, and then what would be, let's say, the premium we should apply to make sure that this is going to be policy that we actually make money from, right? I think that's the challenge. I think machine learning models, when they encounter new data or new distributions, this is where they start failing.
And
And
that's
I
it,
think
yeah. When
that's
it sees
yeah,
something it's never seen before, it finds it really hard. You know what's fascinating? One of the most interesting implementations of machine learning and human in the loop that I ever personally executed on was with this company called Causalens. And they have a causal model of the world where human beings, or like think of you're a fantastic macroeconomist, you have a sense, you've studied this, you're a PhD in it, you kind of have an idea of supply and demand, like kind of dynamics, and you want to tell the system, these are my priors. If you get more data, I want you to update my priors so I can get a distribution. Out of everything that we had done, where I think deep learning and some really sophisticated causal techniques were used, is with a human in the loop, but a system that is constantly saying, there's a new data point. I think it's important. What do you think? And then, we had an analyst actually be like, that doesn't make any sense. That's a spurious correlation. Or he would sit and like just think about it and like, why would that even be? And then like, you would go into the research and financial news and you're like, is something actually happening that the machine is saying, I'm seeing this predictor, every time this thing is moving, and there's a 2 month effect that I am detecting. Do you want to take a look at it? That is where like it, it was one of the most successful, or the more successful implementations of humans and machines working together with a human judgment aided forecast. That's the best
yeah,
way I
no,
could put it.
yeah. And I think if you look at chess as an analogy, I think yeah, AI is better than a human at the game of chess. But I believe in this. I believe this is still true, and someone would correct me if I'm wrong. But it's a human plus AI is better than just AI. I believe today
Yeah.
still. So it's basically the augmentation of AI and the human creativity. AI is able to kind of do the number crunching, and when you pair the two together, it becomes really really powerful, right? And um, I think to that effect, I mean, you have been in this game a long time. You've seen like older techniques applied to data, and then now you're seeing kind of new age, let's say NLP or Gen AI capabilities. Um, where do you see kind of the changes or the inflection points in terms of hedge funds or companies in your space really adopting or having basically the challenges that they're experiencing, moving away from old school techniques to some of the newer techniques that are coming online now?
Yeah, I think so. Just going back to my story, I when I was at Third Point, I think we built a extremely successful team that was able to work with structured data, like things that are in tables, if you may, very, very large tables. But we were good at that. We were good at getting data points from a bunch of different sources, collating it together, and presenting the most factual information you can in that process. Where I failed was in language, because now if you think about a place like Third Point, or you think about like wealth managers, asset allocators, anybody that's not fully systematic, or even folks that have like what, we'll do a top down allocation where the bottoms up will use a screen or a system to go and actually get it. All of them had this assumption that I have a process that's very structured and I have a process that is not structured. The structured process is very disciplined. I only buy companies that have an ROIC greater than this. This is a theme that I'm picking, so on and so forth. Right? It's a very structured process. But the most fun and the part of the problems I could not solve were, an analyst would sit down with me, and I'm not going to use these are all made up stories, but they would sit down and be like, they'd highlight a bunch of stuff, say, every time this guy writes like this, everybody picks it up, they start talking about it, and he's really good, right? And it was just like a gut feel because they had read so much. I truly believe a really good analyst is what some of the world's best readers. And they are prolific note takers. They are prolific highlighters. They are excellent summarizers. I'm just playing the analogy of an
Yeah.
analyst that did a lot of work that could never be modeled out as a cognitive kind of AI. That didn't exist 3 years ago.
Yeah.
But BERT came out, language models came out. I was just starting to see this entire trend. So after I left, I joined Ravenpack because Ravenpack was, I think, one of the craziest companies. Like I went after, like, during my garden leave, I visited their office in Spain, and I was meeting the CTO, and the CTO was like, we built this insane system that 70% of the world's hedge funds use, and we built it in Lisp. We are the world's largest Lisp hires today, right? Like, we find Lispers all over the world, and he used a functional programming language with Markov models on top. There was machine learning, but it was essentially a supercharged rules-based system, or like a regex tool. And this guy built this tool, Armando and Jason built this, and they were running a full org based on, and like they would like high precision, low recall signals for financial domain. And I was like, okay, you have all of the right tooling. There's this new wave coming, which is this neural wave. There's some kind of magic that is in the combination of the two, and I didn't know what it was. And that's kind of where I like, what we've been working on at Ravenpack for the last few years has essentially been on how do we take what an analyst has in their brain and like that intuitive nature or the frameworks that they use or the qualitative checklists that they normally do, and how do we make a generic enough tool to be able to answer that. And we've been doing it for a while. Then ChatGPT just like whatever we thought we could do, it just doubled and tripled in like capability. So it's been a fascinating 1.5 years, like truly fascinating. It's just moving so fast. There are new capabilities that people have tried to do for years. I mean, decades.
Yeah.
And that's where like, the AI is not coming for finance, but the AI is coming for cognitive decision making.
Yes.
There is a future that I think is going to be not that far away, where analysts are going to learn this new language called prompting, and analysts are going to learn, this way of using, language models and retrieval tools and all of these things, and start encoding their IP in a system that learns. It's kind of like what OpenAI did, right? Just think about GPT. Like 2016 they were like next word prediction for a long time. It was really good at spitting out a lot of information, but you could never tell it, but humans want output like this. And then we have a new algorithm that comes out, which is the human feedback, the reinforcement learning with human feedback. And suddenly it's like, oh, you just wanted me to look and behave like this. I had to align with your values. I think that's going to be the interface now going forward, and that's kind of just a fascinating subject.
Yeah, no, I think this is like so many great things that you just mentioned, which is basically human analysts that have been in the hedge fund space were doing things that now large language models are capable of doing. So
Yes.
basically, that knowledge work, that cognitive decision making, is now going to change dramatically because some of that work, maybe a good chunk of that work, can be automated by large language models. It's something that we firmly believe at Multimodal. We're trying to go and automate a lot of the knowledge work that's happening, particularly in finance, but also insurance and healthcare. And I think what's really impressive is that it was this like model task alignment with RLHF that OpenAI did, that the model understood what the task at hand was that a human wanted to get done, and then it's able to do that now. And if you could just kind of fast forward some of that, and a lot of the times, a lot of the analysts in the hedge fund space, they're looking for certain patterns that help them make better decisions around some event that's happening in the future. A model can go and do that at scale. So you may very well see smaller hedge funds, fewer headcount hedge funds with access to lots of data, great algos, and they still have to build up the AUM, but they might be able to compete with maybe even a 0.72 of the world, right? If they build it right, because you don't need quite that big headcount still.
I think there's a future where that could be possible, but every time someone brings that up, like, 2010, 15, 20, what ends up happening is human beings, and I think for the better, by the way, are still critical in that final decision making process. Because
Yeah.
one thing that I think we haven't gotten there yet, maybe we'll get there, but human beings are like really good investors, understand what other investors are also thinking about. Traditionally, that's a big part of, like, can you smell where the market is going? There's one thing about truth, and then there's the expectation of the truth. And that's kind of where that part and that cognitive ability is still, I don't know if that's true or not. Let's see, we'll find out in a few years. But that kind of gut feeling is still there. I think analysts still play a role there. But yeah, this I have so many. I was actually thinking about it in a completely different way. The other day, I was talking to. So, have you heard of this news media company called Benzinga? Jason
Yeah. Mm-hmm.
Raznick runs Benzinga, and Benzinga was very good at. They found their niche in small caps, because if you think about how the large caps are covered, they got a lot of sell side analysts that are looking at all of their data points. They are researching it. They're writing reports on it. The market really likes it. There's that whole ecosystem of, I'll invest if somebody's writing about this company, and I'll write about this company because I believe this company has a lot of potential. That's great.
Yeah. Mm-hmm.
What about the other market? Well, like, what about private markets? What about all of these areas where, if there was information flow about what these companies were doing, if there was information about their like market trends, what they're doing, and if you can't have a lot of analysts do it, but you can have a lot of bots read about certain segments that these companies operate in and create news or create information, and we can have bots that are research analysts that can take that information and say, based on trends, these are what the large public companies are doing, these are what these small public companies are doing. They seem to have overlapping customers. They're competing in the same space. Their product features are pretty overlapped. I'm getting really good testimonials from Glassdoor or like wherever that is.
Yeah.
We could essentially have on the flip side, instead of just focusing on the largest, most covered companies, where I don't think there's much of an informational edge, if you may. Those are like extremely well studied companies. What about everybody else? What about this whole, entire world of companies that people just can't focus on, because where else would you give all your attention?
Yeah.
It was just a thing where I was like, it's going to impact all parts of the supply chain.
Yeah, completely agree. Because this information on these small caps has been available. It's there publicly, right? The
Yeah.
challenge is there is nothing that can analyze and distill that information as a hedge fund analyst would. But now, if a hedge fund analyst can basically program what they do for large caps, but then now this is available for small caps, and they could do it across the entire small cap universe. Now all of a sudden you get really great alpha that wasn't powerful before, that wasn't available before, and now you can make investment decisions off of that, right? And I think that is right. It's like newer capabilities, newer investment opportunities in some ways open up for the hedge fund space as a result.
Yeah, like, think of a completely automated seeking alpha. That's just like, okay, I kind of understand these are the general themes I should look at. These are 1,000 quality control checks that I can run, but if I can do it, then I can like start coverage on something else. And then, I don't know. It was just like one of those things where we're seeing it right now. Where, like, we're a news company, and we're starting to see the volume of similar news articles that are now being posted in more and more media websites.
Mm-hmm.
And they're not exactly the same. So earlier we would have this hashing functions where we're like, how much of the content within this and the stuff we detect, is it overlapping? Is it not? A lot of like PR companies are like really good at doing this. They'll take something, they'll reword it a little bit, they'll add a few characters at the end. They're like, this is a new story, but it's coming through my newswire. What's going to happen if everybody can write and bots are writing for you? I spent a lot of time just thinking about, what is information then? If information can constantly be taken in, absorbed, regurgitated, chunked out, and then reformatted and sent out again, it's going to be
Yeah.
like a pretty interesting space.
Yeah, I mean, you really need semantically new information, right? If it's been covered and it's semantically the same or similar to what was before, it's not news at that point. It's
Mhm.
regurgitation, and you are seeing that because of AI propagating content that's viewed elsewhere. One thing that's really interesting, and I think it's really relevant for our listeners, is Raven Pack has been around for a long time, and as you
Mhm.
mentioned, it's been built on Lisp. It obviously has great distribution. A lot of customers really love it. How do you think about modernizing the software stack, the tech stack, um, without disrupting the core business and the distribution, everything that you've built up to date? How do you think about modernizing it to stay competitive with some of the newer technologies that are coming online?
I mean, that's a great question. It's something we've been actively working on for the last 3 years, I think, pretty deeply. I'll start with basically why is it still valuable to take signals from Ravenpack? Like, if everybody
Mhm.
can read the news, then what is the value of Ravenpack? Because I get that question a lot, and a lot of our clients are like, no, no, no. What we've always done is high precision, low recall with full auditability. If we tell you we detected something, we will tell you exactly this is what we detected. These are all the human beings that we've surveyed that can rate this detection, and this is why we're giving it a score. And we've done that for a long time. What we've ended up doing over the years is we've built a taxonomy of like 500,000 things that happen in the world of business and finance that we detect, and we organize it neatly into these 8,000 groups and saying this is a bunch of events that are happening around a person's or a company's guidance, and this is where all of the sources that it's coming from. That vocabulary is not changing, right? Like what's changing is the interpretation of, but I don't think it's as positive as you think it is. Or what if I wanted to change what you just provided me, and you're almost there, but you haven't thought about it from my perspective. So what we're realizing is that because the industry is getting accustomed to working with large volumes of data, specifically textual data,
Mhm.
the what we started to do is, do you all need embeddings? Do you all need financial domain models? Like, if you're customizing these things for yourself, if you're trying to classify your alpha from your sources of information, you still need architecture to be able to do all of this. And I've lived in a hedge fund. I can tell you, you don't have a lot of time for infrastructure. You would much rather focus all of your time in finding really good signals and focusing your research on that. That's what you're there to do.
Mhm.
So what we've seen, or the evolution of our business, has been, in addition to providing signals, we're providing infrastructure for anyone to construct a Raven pack killer internally. I love it when people say we want to beat your score. We're like, that's good, because we don't want to be the score. We want to be the benchmark. I think it's just
Mhm.
a lot better to say, here's an objective detection system that has been running for a long period of time, and there's a general consensus that our approach in how we have scored the world or tracked the world is a fair and balanced approach. That's all we're here to say. We're not here to say that is this the exact alpha, because in this day and age, I want you to go and customize it, right? It's like, here's a framework and how we look at it, but there are 1,000 ways that you can change what you're looking to do. So, I mean, there's a ton of techniques there that we can walk through, but the thesis is basically, and it's playing out. I'm seeing more and more firms getting really excited about our annotations product, because what we're doing with annotations is natural language processing and infrastructure. And we're like, here's everything, how we look at the world, and we can show you how you can modify every little part of what we did if you want to create fully customized signals.
Very interesting. So yeah, I think it's not just about selling the signals. It's about giving them access to tools to be able to customize a bit more of what they may want to do, right? So they don't have to go and figure out the stack themselves, because not all of them have the resources that one of the largest hedge funds in the world may have to go and build everything in house, right? And so I think
Mhm.
be able to help kind of go and introduce some of the stack to them. Um, the more I hear you talking about this, I just really wonder, for non hedge fund investors, what hope do they have of finding any edge over the market, right? Any alpha. Seems like the best that they can do is maybe just invest in index funds at this point.
That's a great question. I'll flip the. I'll give you a completely separate analogy, and like maybe we'll come back to that same question. But here's the analogy. I forget which large company had done this, Microsoft or Accenture. Oh wait, BCG had done a report. They put out a research report, and they said they gave ChatGPT to a bunch of people, right? And they wanted to measure productivity gains across their wide swath of consultants and everybody else. And it turned out the ones that were really sophisticated in their fields, they didn't find a lot of value in ChatGPT. But
Mhm.
if you think about the ones that were not, they suddenly, their productivity levels or their quality of their output, the quality of their writing went up by 40%. So it was almost like because you weren't taught in a very specific way, you have not learned the toolings that you needed in order to compete with the bigger, like with the bigger folks. They will have access to more information flows, they will have access to more deal flows, but in frameworks, in thinking, in judgments, in like things such as like I remember us, we would be trained a lot in second and third order of thinking. How do you take what's going to happen now and just start like breaking it down? What are the next kind of things? What are the inputs that go into it? What are the impacts that would have? How would you go measure that? All of these kinds of things that
Mhm.
cognitively dense, you need to have, you have to be trained in those kinds of things. What if somebody just built a chat GPT version that said, I can help you think in this is the mental framework for a trend analysis. This is how you should think about a trend if you want to go do it. There's going to be that. But, like there's going to be it's not a great equalization, but I would say a great democratization of thinking, of templatized frameworks, of stuff
Mhm.
that traditionally was never available to both hedge funds and the individual investors. But like if you think about alt data, how many retail traders are looking at alt data today? I do remember during the GameStop days, there were like Telegram channels where people were posting stuff that they were
Sure.
grabbing from the other paid providers. And they were just like posting it in the channel and being like, this is the trend. I got it from a guy that I know somewhere else. Right.
Right.
So I think that's going to continue, but I think decision frameworks are going to get democratized, at least the low level stuff. And that's a really interesting place to be.
Yeah.
Because then you could ask the flip question, right? What's the value of a really large asset manager if I have a GPT that can do it and I got 1,000, or like 10 million retail traders using it?
Yeah, I mean, I think that's a very interesting point because if you look at writing and writing code, right? So just writing text and then generating code, because of ChatGPT, the average person now is able to write better and write better code because
Mhm.
ChatGPT can help assist that. So the bar is kind of helping. The bar is now moving higher than what the median was because it's being assisted by ChatGPT, which is pretty high bar, and not in the realm of domain expert, but still pretty high. And I think what you're saying makes sense, which is if you apply that same framework to investing, now all of a sudden, because people can create the right template for you to invest better and apply better ways of analyzing market data, the average investor becomes better. So maybe they're not at the level of sophistication or goodness of a hedge fund trader or hedge fund PM or a hedge fund analyst. They get closer to that, which means that on average, you should see better investors that are primed with better templates created by the true domain experts, right? That are building the templates for maybe more of the average or median investor out there.
Yeah, I mean, I wish I had a GPT who's called the "Don't Make Stupid Investment Decisions" GPT, and
Yeah.
it's just constantly checking the things that I do, and it's like, guys, normal people don't do it this way. Are you sure you want to make this decision? Is this one of the biases, right? Like, I mean, if you think about, there's like it's almost insane. We've been doing some research. I'll give you some of the more exciting research that is going to be coming out next year. We used to run hundreds of thousands of surveys with economists, market participants, sell
Mhm.
side people in order to go and gauge, hey, we're detecting this theme, this topic, something else. Can you rate and score it for us? GPT, honestly, has been one of the best labeling systems I have ever seen. And things that would take us a long time to do, we're like, oh, GPT can actually do it. Now, I know that it's been trained on all the information it's learned till now, but just think about if you could say, I'm just going to version it today. I'm just going to keep a version. And I'm saying, from you can't see what's coming up next, but give me your objective decision making frameworks and saying, this is something that happened. I think this actually moved markets. Label it for me. And we're finding just like we can come up with new signals like, Raven BERT, a crude
Mhm.
BERT, like a Russell 1000 large BERT sentiment, like truly like a Microsoft sentiment score. And there are things that we can do that we've never even realized it was, doable until we started to see where like our hindrance was, you know, you're like getting an opinion, storing an opinion, rerunning that opinion over time, all of the mechanics that go into how we generate and detect things from the world. That was a very manual process by default. It had to be. Because at the end of the day, somebody had to go and like label these things, and we can't go to a mechanical Turk because we needed industry experience. Now I just gotta fine tune my this on my own content. So I'd be like,
Yeah,
like, just go label this stuff for me. And what we're seeing is very interesting. Like we're gonna be putting out a bunch of research on it. Ravenpack is all in on language models and large language models, depending on the definition. But that's
sure.
kind of been one of those almost immediate new things that we were like, oh, all of these things we've been wanting to do for so long, they were just so manually intensive. And we're like, now we can have two or three people that have brilliant ideas work autonomously. And we just give our own teams infrastructure and we're like, just go play. And like, you're the researcher, the PhD, go do homework. And they'll come back to us in 3, 4 weeks with stuff that honestly used to take us 9 months to do before.
Yeah.
And that I'm seeing live. So I'm already seeing initial benefits of large language models in like our core business of just
Yeah.
how do we detect things that matter to the investment world.
Yeah, you're using it as internal tooling. So basically, models that help you annotate data sets that allow you to build better products thereafter, right? So it's a tool that helps you get to the end state faster in, let's say, a matter of weeks, whereas it might have taken you months. And I think this is where a lot of people get it wrong. I think a lot of companies still today, based on conversations that I have, they think of AI as being a nice to have, something that they could maybe wait a year or two, let the dust settle, and then like they go and dip their toes and they often use the crawl walk run methodology where they might be ready to crawl in 2 years time. In a lot of cases that's just way too late. Like as you're saying, what you're doing today by adopting large language models and language models in general to what you do allows you to move faster as a business. So can you just imagine a competitor of Ravenpack that is trying to operate without any major investment in this space, how far they're going to be left behind in just a year or two from now?
I mean, if they're not already doing something with it, I would definitely be worried. I am always worried that like this stuff is so accessible now. I fully expect, and I have seen this, for the last few years, there will be competitors that will keep us on our toes. This is becoming democratized and in the best way possible, by the way. I just think having more eyes on a problem that's this core is a generically good thing for the universe. But for us, like the first thing we did, I remember like a year or 2 years ago, was we have 30 billion sentences of point in time stamped financial content from a long time ago. We like vectorized everything. And this is back like we just said everything is a vector, everything stays as a vector. Now give 30 billion vectors to a bunch of data scientists and you're like, we want you to come up with techniques and how to look at the world of finance. We want you to detect things that are new that never has happened before. We want you to automate which companies we detect. We want you to look at their supply chains and start tagging all of that information. We just wanted to do all of this, but now we have a rules-based system, and when the rules are not good, we have a embedding based system that is non-deterministic, but it's very good at stuff like cosine similarity and semantic closeness and things of that sort. So it's honestly like for us, it's a blessing. It's truly been a blessing because we're taking a very robust high precision system and we're taking a system that is probably the best recall you can get. Its precision is quite bad. And we're like literally trying to combine these techniques and saying this is magic now. And if like with
Sure.
large language models, it's just customizing the whole ecosystem where it's like now you can tell that to label all of the infrastructure we just given you, and you can create new alphas.
Yep. Yeah, I mean, but in other ways, like it's scary because someone can go and maybe get the embedding version of the system built to have high precision and high recall, which would present them a opportunity to leapfrog existing players, so
Yep.
long as they can gain access to the data. And I think that's where the threat comes in, right? And I think you're framing it right, which is right now it's an opportunity as long as you continue to lean in and invest appropriately.
Yes.
But there is the threat that someone goes and leapfrogs it because maybe this newer technology applied a different way allows you to go get the best of both worlds, the regex side as well as the embedding version.
Yeah, I mean, it's kind of like, I forget who I was telling the story to, but my like when I was at Revere, my old boss was Stuart Bell. He was the 25th employee of Bloomberg, and Stuart had the most incredible Bloomberg stories ever. Like, think of Bloomberg in 1984, where central banks were still literally had large chart books, like actual books, and they had graphing people. So if you're an economist, you learned how to plot a yield curve on an actual piece of paper. And Bloomberg's walking in with this, like, laptop, which is a full suitcase, and he's walking into like central banks, and he's like, just wait, click, and it's a 96 baud modem in 1986, and it's generating a green line dot by dot. And like all these central bankers are like, wow, I have all of these people, these are my graphing people. They, like, that's what they do for us. And it's kind of one of those things where if you were an economist back then and you didn't lean into it, you're like, this is come, it's not even, it's coming, it's here.
Yeah.
Like my recommendation would be embrace it. You might just enjoy what you discover.
Yeah, I completely agree. I wholly agree with that statement, and I wish more people will listen to that, and I think they will in due time. Switching gears here a little bit, obviously, hedge fund space super hungry for data, any
Mhm.
data that they can grab their hands on. I think in recent years, because of GDPR and other data regulatory acts, it's become a little bit harder. Gmail, for example, won't allow you to use email data for purposes that are beyond just like making the user experience better for the actual Gmail accounts. We've seen this in other areas as well. People choosing not to sell their data to alternative data providers and aggregators. How do you think about all the changes that are happening in the broader space? Do you feel like the regulatory environment's got it just about right, or do you feel like there needs to be less or perhaps more regulation in this space?
uh, I'll give you my categorically clear answer. There needs to be regulation for the audit trail of where people get data from. 100%. We license our content from everybody that we work with, right? And we are strongly of the belief that everybody that produces good content should get paid for it. But like where it gets really shady, and I know the industry has become a lot better, but I remember, like, there were all these like crappy SDKs installed on mobile phones that were transmitting all of this information about behaviors or purchase behaviors. It was anonymized, but nobody actually knew that this app had an SDK that like is literally transmitting all this information. That is just shady. There's a very categorical, don't do that, that's really dumb, you will probably get sued if you do that. But then on the flip side, I also think that you know how Facebook makes what, $10 per user. The user is using the service for free. Facebook is now going to Europe and saying, that's how much we make out of you. If you just pay us $10, we don't have to give you any ads, we don't have to serve you any ads. It's pretty clear. I want to go to Amex and be like, Amex, 1% cashback, take my data. Like, just take it. It's all yours, right? Like, because if I get a 1% cashback on every transaction that I'm doing, because I know somebody's using it in a anonymized, secure, compliant way, I don't actually see that as a bad thing, because what am I going to do with that data? And if somebody's, taking it and making better, I mean, the Fed, for all of what they do really well, sometimes is quite, behind in all of these kinds of data mining techniques. I mean, if you just go on these macro Twitter feeds and you just see how the Fed says something, but these macro guys are sitting on a gold mine of information. They're like, we're looking at all the inputs, we're tracking the ISM scores, we're seeing all of this. How do we know it, ahead of time? I think in some way, at least on a, if the hedge funds can't use it, can we at least give our central banks better information so that they can make more rational decisions? rather than very delayed statistical data that's been collected the old school ways. It's always been
Yeah.
a little surprising to me that there's such a large leap for the government to make that same kind of decision, or to start at least looking at those inputs. I
Right.
know
Right. They should have
it's a totally
that.
yeah, it's a tangent, but that's just where I was like,
Yeah.
why not? Like, data is useful.
Yeah, I think there are a couple of things that are super meaningful in just what you said. Like the Fed should have the best information under the sun because for them they're driving the macro economy at large, so they should have access to more information in an anonymized way that allows them to make the right macro decisions.
Hmm.
Like inflation is a great example, right? You see a core inflation. I think it rose in October by a little bit year over year because I think core PCE was 3.5%, whatever it is.
Hmm.
It might not even be the most informed number. Inflation happens with such a lag still for the Fed when in fact you should get much more real-time indicators. And I don't know how much that world has changed over the years. I mean, I know the Fed and other central banks are trying to do a better job, but I feel like they're still missing out on critical pieces of information that they should have access to. At the same time, I think hedge funds and such, they do acquire data because obviously it affects their bottom line. So there's such great incentives to go and get the best data. And a lot of times those users may not know that their data is being even sold and packaged, right? And I think that is
Yeah,
the
yeah,
Facebook example where users don't know that their data is being used in a way that is beyond just making the user experience better. Like others are taking that data and making money off of it. But that decision should be more explicit for the user where they can opt to pay to not have their data sold, or they choose to not pay anything and then their data sold. Or if the value of their data is worth so much, maybe they even get paid to be an active user of the app, right? So Facebook pays users, let's say
yeah.
$1 to use the app because the value of their activity is worth $10, let's say, whatever it might be.
you know is there should there be like a HIPAA compliant style protocol for transaction information, in the financial world? That could be a really good set of policies, because there's a framework. This is how you clean it. This is what is PII. This is the audit trail. These are the consents you need to get.
Yeah.
I can see a future where that's not too far away, because at the end of the day, I always think about, like, ultimately a human being making a decision, at least today, still matters. We don't have a lot of bots that are making the decision. By giving the power of, do you know that your decisions, the stuff that you do, is valuable, and
Mhm.
just by doing stuff you get paid in the background. Is that like, is that the future of, what's the spacing out on the universal basic income?
Yeah,
Is
that's
that
right.
the future of basic income? Just survive, and just by you walking, we're taking the information and making a decision out of it, and everybody gets paid. I don't know.
Yeah, the user activity alone is what is like basically the monetization of that data that they're leaving behind allows them to get that UBI, let's say, right?
Yep.
Which is interesting. How do you kind of changing gears here a little bit more? AI, there's such a big race that's happening right now, right? You have the Metas of the world releasing Llama open source. You have the Open AIs, Anthropics, Googles of the world building their own closed source models for the most part. Some that are making it open source, like Google to some extent. Um, and there's this big race for GPUs that's underway.
Hmm.
China's in the ring. Europe feels like it's a little bit hamstrung, a little bit with GDPR perhaps, and maybe not as risk taking by nature. But how do you think about the bigger geopolitical play that's happening around AI, the race for building models? Because it seems like it may be a winner take all, right? A single model, if it gets enough distribution, ends up being the model that's being used across industries to make really important decisions, investment decisions, underwriting decisions, and such.
Ah, man, it's such a geopolitics always makes me a little dreadful because there are good things that are going to happen. I feel bad things that are going to happen. On the Let's start with, like, I think every country is going to have an LLM. I think every business is going to have an LLM. Nvidia just said right there, the designs of their semiconductor fabs is now encoded in an LLM with all of the information on the tickets, how they resolved it, the facts that they found out of it. Imagine somebody just saying, I don't need to steal NVIDIA anymore. I just need the LLM. That's their brain. That's their cognitive brain, what 20,000 of the world's best engineers are working on. So I feel from that side that every country and the whole open source movement has been critical in expanding or, almost neutralizing that initial massive leap that OpenAI demonstrated with ChatGPT. I think what Facebook is doing there is basically saying they beat us. Same thing with Google. We kind of have to maybe like the Jan will phrase it and say we want to democratize all of this, but I honestly feel like they were like cats out of the bag. Now we actually everybody has to have an equal footing, and there are techniques that can be taught. So everybody's going to have their own LLM. Finland just released the Finnish LLM. There's a German one that's floating around that's really good on German QA tests. That's going to happen. Then you have the company specific LLMs, then you have the financial domain specific LLMs. The geopolitical implications of that is the countries that have the sophisticated industries and talent that can act on this will act on it, and they will get even more of a competitive moat, because now it's not like I have to train a bunch of people. I have to train my LLM that's already been trained on the best or the most cutting edge thing, and now it would self learn. That's just, I think it'll increase the divide even more if you were to ask me, because intelligence is now growing almost exponentially, right? Um, and then on the bad side, everything that's good comes in its negative variant. I mean, like malicious actors are obviously seeing this and saying, "Oh crap! Like I never thought of these new style of attack vectors that nobody's ever seen." There was just a news article recently on Gmail about like the most sophisticated phishing campaigns you can possibly imagine. And imagine a phishing campaign that organically is learning in an unsupervised way, as long as it has an objective, which is get into the guy's computer. That's scary to me. That's where I'm just like, I really get scared. Where it's like, whatever happens on the good side is equally going to happen on the bad side. And I think AI is heading for regulation. I think it has to. It's one of those things where whether we like it or not, now it's coming for our cognitive, you know, like this is our operating system. This is how, it's like it's coming for the cultural cognitive systems. And that's kind of where I do believe there's going to be regulation, whether we like it or not. And all it takes is one bad actor to actually, spur all of this. And I don't know when that's going to happen, but given where open source is going, I don't think it's too far.
Yeah. Yeah. I mean, I think typically regulation, the call for it happens when there is a really bad event. So it's sad to say this, but it's like something awful is going to happen, which is going to prompt regulators to take a very forceful action in introducing regulation. That's the most likely outcome. And maybe nothing bad happens and regulators still do regulation preemptively. But I think you're absolutely right. The stakes are way too high for there not to be regulation. I think governments will realize that in due time. And then the fact that there are state sponsored or just state promoted LLMs just shows you that it is very important that your country or your company has its own LLM because it's what's going to be used. So, like China using OpenAI doesn't make sense, right? US using a Chinese LLM doesn't make sense for the most part. Like that, there's interest. There are many geopolitical interests that would prevent that from happening in a big way.
I call it, Ankur, alignment problems, political alignment problems with my
That's right.
LLM.
Yeah,
You got to give it the right preferences, and China will have a different set of preferences, right? Like
that's right.
that's kind of where I do see that
Yep.
happening. Yes.
Yeah, and it comes down to the values level. Like it's crazy. Like LLM can be aligned to have certain values. It's crazy to think about AI having a set of values, but in a given a certain choice, it may make different choice if it's Chinese LLM versus an American LLM, for example, right? So
Yeah.
it's a very interesting
And
thing
that's
to
the
focus
same thing
on.
applies to finance as well. Like think about, of a fund's IP is the people that work there and how they can process information, same information or slightly differentiated information. Imagine now in this new world, if everybody has a cognitive operating system, like Karpati called it, right? He's like the
Yeah,
cognitive OS. Somebody's building it. Everybody's building. That's
yeah,
OpenAI's whole mandate, right? Have a brain, have a bunch of functions and tools, and then the brain is orchestrating all of this, but in a cognitive sense. that's going to happen in investments as well. And I feel like most, if not all, companies, at least the sophisticated ones, are definitely aware and they're acting on it. The discretionary folks, the fundamental folks, are going to need tools that they can use that start to align what they think in a secure way and do that. And that's also something that Ravenpack has been spending an inordinate amount of time thinking through.
Yeah. Well, Aakarsh, it's been awesome having you on the show. Thanks for going through all of this with me. For our listeners, where can they find more about you and Ravenpack?
Ravenpack.com. We're there. We're also on LinkedIn. You can find me on LinkedIn or Twitter. Uh, yeah, my Twitter handle. I don't know if I should disclose it or not. I haven't seen my own feed in a while.
Well, perfect. We'll
Yeah.
add this information to the show notes, but it's been a pleasure having you. Really look forward to picking up this conversation in the future. And thanks again for being on the show.
Thanks a lot for having me.